IHH Healthcare Berhad was incorporated in 2010, and today it is one of the largest healthcare networks in the world. IHH offers primary, secondary, tertiary care, quaternary care, complementary ancillary service, and medical education. IHH Healthcare have 80 hospitals in 10 countries with 65,000 employees. The three subsidiary company for IHH is Parkway Pantai, Acibadem Holdings, and International Medical University. In addition, IHH Healthcare also managed to lead 8 brands all across the globe. Duo Pharma Biotech Berhad was incorporated in 2000 and is one of Malaysia's leading pharmaceutical company listed in main market of Bursa Malaysia Berhad today. The company subsidiaries involved in manufacturing, distributing, importing, and exporting of pharmaceutical products and medicines. Their headquarters located in Kuala Lumpur and they had 1,594 employees. They also have 3 manufacturing plants in Selangor and have 2 subsidiaries company abroad, which are Philippines and Singapore. For analysis of IHH Healthcare Berhad stock potential, IHH Healthcare Berhad stock is a good for long-term investment. The company is a profitable firm investment option as the earning per share is high and they will be expecting more positive growth in the future. Price earning ratio for IH Healthcare Berhad is already exceed the industry average, which is 17.4 times. But a high price earning ratio shows a sign to investor expecting higher future earnings in the future and they are willing to pay more. In conclusion, the company has a positive outlook and it is recommended to be part of our portfolio.
Assalamualaikum, my name is Adam Muhammad Daniel. Now we will do a ratio comparison between IHH and D Pharma. The ability of a company to make on-time payment to its creditor is determined using a variety of measurements called solvency ratios. This analysis is crucial for creditors and lenders who want to get a picture of a borrower's financial condition before lending money to them. For this analysis, a number of ratios are available, all of which compare liquid assets to short-term obligations. Looking at the current ratio and quick ratio, we can see that IHH does not rely on its inventory to repay its debt, unlike D Pharma. There is a significant drop in quick ratio for D Pharma compared to IHH, which the ratio slightly decreased. Next, cash ratio measures a firm's ability to pay its short-term liability with highly liquid assets. Based on the cash ratio, IHH can pay off its short-term debt with cash better than D Pharma. Next, a positive ratio on net capital to current liability means that the company has a good operational efficiency. We can see that both companies have a positive ratio on net capital to current liabilities. However, D Pharma has a better operational efficiency. As for cash in hand, IHH has more cash in current assets compared to D Pharma. In overall, IHH Healthcare's solvency ratio is better than D Pharma, which means that the firm has better short-term ability to fulfill its financial commitments.
Hi, my name is Norizati Balkis binti Sarimin and I will continue with the comparison of efficiency ratio. For overall efficiency ratio, IHH Healthcare is better than the D Pharma. Okay, this means IHH Healthcare was highly efficient in using assets and managing liabilities effectively in the short terms. We can see the result of average collection period of IHH was dropping from 2019 to 2021. While for comparison in 2021, the pharma have highly average collection period than IHH, that make IHH is better. Next, for inventory turnover and fixed asset turnover, IHH are good from time to time because it has higher ratio. It shows that company is effectively in using inventory and managing fixed asset than the competitor. For receivable turnover, IHH is better in collecting its account receivable since the high ratio is proven. But the pharma total asset turnover is better than IHH, and it shows the pharma is more efficient in using asset in generating sales.
Next, I will talk about the leverage ratio. Referring to this table, we can see that there are 4 ratios that is included in the leverage ratio, which are the total debt ratio, debt equity ratio, and long-term debt ratio. For the total debt ratio, we can see that IHH is performing better than the pharma with the value of 0.4 compared to 0.46 for the dual pharma. Next, debt equity ratio. You can see that IHH is performing better than dual pharma, which is 0.67 compared to the pharma, which is 0.87. The next one will be equity ratio. For the equity ratio of IHH, the value is 0.6, which is not good compared to the pharma, which is 0.54. And the last one will be the long-term debt ratio. The value of the long-term debt ratio for the IHH is 0.21, and it is quite good compared to the pharma with the value of 0.26. You can see that there are 3 ratios that has a good value and better value compared to the pharma, and only one ratio that shows that the pharma is better than the IHH. This means that IHH is quite good and better in utilizing its debt compared to the pharma.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Amar Faiz bin Arundin, and I would like to share about profitability composition ratio between IHH and the pharma company. Based on this ratio, IHH company have a good performance on gross profit margin and net profit margin since it recorded higher ratio compared to Dua Pharma, which means the IHH company are able to control variable cost or cost good of sold and generate the net income from its sales after deducting all expenses including interest and taxes. While the pharma company have a good performance on return on asset ROA and return of equity ROE since it recorded higher ratio compared to the IHH company, which means the company are able to generate the net income relative to total asset and its operations and rate of return on investment for their company.